Hey, good afternoon, my trading family, and happy new year. I wanted to follow up with another video here since I think we're on another upswing through possibly the beginning of April. And so I wanted to briefly update you on that macro outlook. Now, before I begin, just a bit of housekeeping. Usually I upload this video to TradingView and then YouTube, and then I embed the YouTube video into my site, my Substack site. However, Substack has their own video interface, and what I like about that is, for instance, when I am listening to people who do videos on Substack, I can listen to it via Android Auto in my vehicle as I'm traveling. I can go to the gym, shut the screen off, and the video will still be playing in the background. YouTube, of course, does not allow this. Now, you can use third-party applications, which I do for various YouTube videos, but I know that some of you either aren't afforded that capability because you're an iPhone user or just don't have the technical wherewithal to find the applications that do that. Maybe you just don't want to bother with that. So my question for you is, would you like me to upload these videos via Substack so that you can listen to them in the background? You don't necessarily have to have the video running the whole time. If that is the case, I would love to hear from you in the comments section. All right, without further ado, let's get into this week's. I'm going to start right here on the Bitcoin chart since that's where we're at. And you can see here that Bitcoin has reached the $102,000 level once again. Remember, this is a fib retracement of 1.618 from the 2021 high to the 2022 low. All right, now if you reverse that, you'll get this 1.68 618 fib level, which is very important. You see it all the time when you're doing fib charts on any sort of commodity or chart, price chart. All right, so this 102 offers significant resistance, and you can see it did that previously here for about a week and a half, and then we broke above it. We went to 109, which is also another fib retracement of 1.618 from, I can't remember how I drew that, and I don't have it drawn here on the chart, but 102 and 109 are significant levels of resistance. Now, as I'm doing this chart here, I am seeing a potential kind of a scary pattern. You guys will recognize this. If this plays out, we've got ourselves a potential head and shoulders pattern going on here. I hope that is not the case. Now, if we can break 102 and settle on above that, then that invalidates this head and shoulders pattern that looks to be playing out right now. Also, if we stay above this ascending pink trend line, remember this line comes from our previous highs, and I just extended this out, and this is definitely a level. Now, if we break below, let's say 92,000, something like that, this head and shoulders pattern will definitely play out. It looks like we're then going to 80,000. So something to put on your chart. I'm not saying that's going to happen because I just spotted this just now as we're doing this video, but I want to make you aware of everything that I'm seeing. Right now, my bias is that we will break this 102 level and continue on upwards through end of March, possibly beginning of April. But we have to break that 102 level. All right, let's see if we can get some clues from our charts that we siphon through. All right, first one is the dollar, and you can see here on my indicator we have a red dot, which is telling me the dollar is going to continue to sell off. We've already had two big sell days on the dollar, and really we're a lot higher than I expected us to go. I wouldn't be surprised to see us come back down to this 106 level. With the dollar dropping, that indicates less buying power for US citizens or anybody that uses the dollar. Uh, so when, which also indicates inflation, all right? So when inflation is in gear and when the dollar has less buying power, it takes more of those dollars, right, to buy a thing. So you often see that price reflected in stocks, commodities, and crypto because it takes more dollars to buy that thing. That price is is reflected in the price. All right, so, we often have to take a look at both the dollar and the VIX. If both are down at the same time, it indicates stocks, commodities, crypto will continue rising. All right, so taking a look here at the VIX chart, you can see I got a sell dot on the VIX as well, which I don't necessarily trust my indicator on the VIX as much as I would on a stock or on a crypto, but nevertheless, it was right in this case, and we continued to fall, and we're at a very reasonable low level, in my opinion, on the VIX. So with the dollar down and the VIX down, what do you think stocks should be doing? We've been tracking the SPY. Let's take a look at the SPY here. And the SPY definitely did gap up. Now it's come back a little bit since earlier this morning. But stocks are continuing to rise. And of course, stocks are often led by the Magnificent Seven. And Magnificent Seven is often led by yours truly, NVIDIA. And you can see right here, I'm pointing at a green dot. We got a buy dot on NVIDIA and definitely are in another mode of bullish behavior. Let's see, the NVIDIA is up almost 5% today, and we had a big gap here in the morning. So NVIDIA is flying and leading the Magnificent Seven, which is leading stocks. And so we are definitely in a risk-on asset mode. Can we pick up any further clues? Let's take a look at U.S. oil I've been tracking as well. Now, the reason I track U.S. oil is because it kind of leads the energy sector. We can often find clues from the energy sector as to what where dollars are going to go, because when you have cheap energy, it frees up a lot of elbow room for businesses and for regular folk like you and me to spend that extra money that we would have been spending on transportation costs, on heating our homes, etc., etc. We can spend that extra cash on other items that we consumer items that we desire, groceries, or we can invest that money. So oftentimes when you see the energy prices dropping, led by U.S. oil, you'll know that'll be another sign, another indicator that it is risk on again in the market. And that is definitely the case here. We've hit this level of resistance, which was previous support, and then we broke through it over here in November. Actually, we first broke through it, beginning of November, and we've been under it ever since. We're now tested this. We tried to break through it today, but couldn't quite break through this level of resistance. I don't think we will break through this level of resistance, to be honest. I think oil and energy will remain relatively low comparatively with the inflation rate and everything else, which is another good sign for the market. All right. So one last thing I want to cover here is Bitcoin dominance. Let's see what that's doing. And we have a green dot on Bitcoin dominance. Now, my indicator, which I've created with the help of AI, as almost everybody is utilizing these days, this thing is almost a guarantee when we have these green dots in a green buy liquidity block. On the other hand, the opposite could be true. Like if I had a red dot up here, it would be almost a sure sign that we're going down. And we can see various different areas where we had a red dot in a red liquidity block, and sure enough, we went down. Almost every time, guys. This is why I just happened across this combo of indicators and had AI create it for me. And I mean, it's been golden. My followers, my traders, and subscribers on my site know that we have just been hitting it out of the park with this new indicator. So I'm very happy with this. Now, let me go on a little bit of a side tangent here. I know many of my subscribers have asked me, well, are you going to sell this thing? Right now, guys, honestly, the code is very ugly. It's kind of strung together. It works for me, but it's not in a condition that I would be happy selling it in. And I kind of have a couple of different indicators here that I use in conjunction with each other to make this work. So I would consider showing maybe my yearly paid subscribers this indicator at some point, during the course of this next year. But right now I'm not planning on selling the indicator, and really I don't even know the ethics of doing that, because this combination of indicator that I have crafted came from open source code. So I don't know if I'd feel right selling it, but I would offer the education to my paid yearly subscribers. That may be a potential down the road here. Anyways, on that tangent, when we get these green dots and these green liquidity blocks, it is almost I would say a 90 to 95% guarantee that we will go up, as green indicates. And if we were to get a red dot here, almost a 90 to 95% guarantee we're going down. I consider this last green dot here in the liquidity block. You can see the liquidity block here. That means Bitcoin dominance is going back up again. Now we have to beat this VRVP POC indicated by the yellow line here. Point of control, that's what POC stands for. And VRVP is visible. I forgot what the acronym stands for. Visible resistance volume profile, something like that. It just is all this stuff over here showing volume, showing where all of the volume is, and the mass amount of volume is right here where we're at. So if we break this POC today, we're definitely, in my opinion, going back up to test the underside of this bearish ascending wedge. Remember, guys, we had lived inside of that in terms of Bitcoin dominance for the last 2 years. We had lived inside of that wedge. Finally broke that, which is indicating altcoin season. But a Bitcoin, of course, today is showing us a little bit of dominance once again. And this right here, this POC is going to coincide with that 102 level that I showed you. So it remains to be seen whether Bitcoin, the price, can beat this 102,000 level of resistance. If it does, I would imagine in conjunction with that, the Bitcoin dominance chart would beat this POC here. And if that was the case, then Bitcoin is going to show strength again versus altcoins, meaning that altcoins could pull back for a short amount of time. Of course, just recently I posted on TradingView at least, and I believe also to my site, this chart here. This is the total 3 chart. We had this bullish descending wedge, which we broke from. And what I indicated here is that we will continue up to around the $1.13 trillion level for total 3. That's all altcoins excluding Ethereum. Once we get there, I expect us to pull back for, at least a week or two before we try to break through. My sentiment at this point is bullish. So I'm not expecting that Bitcoin, that pattern that we saw on Bitcoin, this head and shoulders, I'm not expecting that to come to a fruition. But I'm going to definitely watch it because I've often been wrong in the past and could be wrong again. And maybe we come back down to this $92,000 level. And it is possible that we break through that to the downside. And if that was the case, we're going to go all the way to 75, 80,000 again. All right. Right now, that is not my bias. That is not my bias because there's nothing that would propel us down there. Of course, that's not to say we don't see the VIX spike again based on news, and we're seeing a lot of fear mongering in the media lately, just really focusing on negative stories that kind of manipulate fear. And of course, there's nefarious reasons for doing that. You can control people much better if you hold them in a state of fear. And so you are seeing a lot of this taking place more recently. As I'm saying all that to say that it's possible we get another sort of fear-mongering news item that brings the whole market back down again. We have to be aware of these patterns because they kind of are indicating that this is a potential. All right. So draw this pattern out, draw these trend lines out, have these on your charts. They're definitely important to pay attention to. All right. So that being said, again, I want to reiterate that is not my current bias. My current bias is not negative at this point. It is very bullish. And I think we do go all the way to the $1.13 trillion level on total 3. And you guys, my followers especially, know, paid subscribers that are able to look at my stock tracker, my crypto tracker, to see my current trades. When I'm all in, you know that my bias is very bullish. If I was in crypto, for example, 50%, but in stable coins, 50%, that means I'm a little bit on the fence. I'm not certain. That's why I'm not all in, right? Same thing with stocks. If I'm in, 50% in trades, but then 50% in the dollar, I'm on the fence. But right now, I've got 100% invested in both stocks and crypto. So I am extremely bullish. One last thing I want to take a look at before we end this video, and that is my Solana chart. Why do I want to take a look at Solana? Well, I've said this in past posts and videos. The cycle is different this time around, guys. All right. What we're seeing is Bitcoin rise, usually in conjunction with Solana and Solana-based meme coins. And then there's a third party that's complicit in this rise. All right. And those are AI gen coins, and often AI gen meme coins. All right. They're all together. They all rise at pretty much the same time. They all fall at pretty much the same time. Solana and Bitcoin and Solana based or AI based meme coins, they all kind of rise together. And then we see that followed up with continued strength from AI gen or AI focused coins. They could just be altcoins. All right. You'll see that trend continue. And then last, but certainly not least, is the old OG altcoins. All right. The stuff like we've been trading for years and years. Those will finally pump. You'll see like Cardano and Litecoin and all those OG coins, altcoins. They'll pump. They'll be last, but certainly not least. We've seen some big pumps. You take a look at XRP for no better example than that. But today, Solana is on the rise along with Bitcoin. And here is my list of AI gen or AI meme coins. And look, they're all up. We've got AI 16Z up 20%. AIXBT up 16%, 13%. Some of these are down just a tad. But the big ones are up 15%, 30, the Project 89, 30%. A lot of these AI gen or AI agents, if you will, on the Solana blockchain are up. And that is a good bullish sign that we will see this run continue. But again, we have to keep Bitcoin. And it's unfortunate. I say unfortunate because this might surprise you all. I'm really not a fan of the way Bitcoin has gone since inception. They say like 1,000 families own 40% of Bitcoin, and 40 families own a big percent of Bitcoin, and that is called centralization. It is absolutely the opposite philosophy that Bitcoin had at its inception, to be decentralized, to be anonymous, and to be convenient. It, it's actually neither of those three things any longer. It's really slow and expensive to use Bitcoin as a form of payment. It's no longer anonymous. It's not been anonymous for a long time, especially when we see our government sanctioning open source code on GitHub for stuff like mixers, and anything they can't or don't sanction because it's not open source, they take over and control. They own 90% of the mixers that are out there right now. So you can't really be anonymous on Bitcoin, and it's definitely not, I would say it's definitely not decentralized any longer. But it is what we have to focus on at the time because it does lead the market, unfortunately. So keep Bitcoin definitely in your the head of your list for crypto. Keep these patterns, levels on your chart at all times. We have to watch this. 102 is critical today. All right, guys, that is about all I have to say today. Peace, y'all.